Hello, traders, and welcome to this week's fundamental recap. This is a new episode of Beyond the Charts series. This was a short, holiday themed week with light data, but the big story remains the ongoing US government shutdown. Now it's in its second week since starting on October 1st, 2025. The deadlock over funding bills tied to border security and spending cuts. Um, it stopped like non-essential workers and delayed key federal releases like the data, trade stats, and so on. Um, so let's see. This data blackout amps up uncertainty. Markets hate blind spots, as we said the last time, as it models Fed decisions on the cuts coming up on the 29th of October. The odds are still above 80%, 85%, so they're still pretty high. Um, the impact of that previous week was early week risk-offs sell-offs. The S&P went down 0.8% on Monday on fears of prolonged chaos, but partial rebounds on private surveys. And what else? We saw gold popped 1.5% as a hedge. The USD softened a bit, but still gaining momentum to the upside. Um, Now, historically, past shutdowns like the 2008, 18, 2019 shutdown added short-term noise but resolved without lasting damage. So we need to watch for weekend talks, as a quick end could spark relief rallies. I'm talking relief rallies in stocks. All right. Now, on to the events that did actually drop. Mostly central bank and oil stuff. Let's break it down day by day. We only have 2 days, so let's start. We had, okay, so the first high impact news day was Wednesday, which was October 8th. We had the New Zealand interest rate decision, sorry, the Reserve Bank of New Zealand. The previous reading was at 3%. The forecast was a cut of 25 basis points, and the actual was a surprise to the markets with an extra 25 basis points. So they cut 50 basis points during that decision. So what does it mean? It means bigger than expected cut, which is 50 basis points. The Reserve Bank of New Zealand is going dovish to boost growth amid cooling inflation and global slowdowns. And they signaled more easing ahead if needed, showing confidence that prices are tamed, but economy needs juice. All right. So how did that impact the market? The ASX and global risk assets perked up like 0.3%. S&P 500 gained 0.2% after this release on easing vibes spilling over. And gold went up 0.4% as lower global rates boost appeal, gold's appeal, of course. And the NZD USD tanked 0.6%, and that's very normal because the lower rates are like bearish for currencies because it makes the currency less attractive for people to hold. So they sell it and go to something that yields more. Okay. Then we had the crude oil inventories. The previous reading was at 1.792. The forecast was a surplus of 2.25, and the actual came in actually higher than both, so which is bearish for the oil. It was 3.715, and we saw the oil reacting after this release. The energy sector dipped 0.5% after this release. The Dow went down 0.3% as oil sensitive names lagged. Okay, and the gold was neutral. USD softened like 0.2%. Euro USD gained 0.2%, and GBP USD gained 0.1% after this release. But it's irrelevant. I don't think that this number or this release was the reason behind uh, like this kind of gains in currencies. But anyway, they're minor gains, no big deal. And then we had the 10-year note auction. The previous reading was at 4.033. The actual came in at 4.117, which shows that there might not be a rate cut because, like, we use this to gauge if the markets are still uh, like pricing in, or how much are they pricing in the rate cut end of this month. Um, so it indicates weaker demand for treasuries, okay? Possibly from the shutdown uncertainty again, or inflation worries pushing investors away. Still solid, like it's a solid auction overall, but the environment is volatile. And let's see how it impacted the market. After this release, there was like mild pressure on the indices. Um, and the gold went down like 0.8% since rising yields compete with non-yielders. So the gold is a non-yielder. It's a non-yielding asset. The FX, however, the USD gained 0.3%, and Euro USD lost 0.3%, and GBP USD lost 0.2%, while the USD JPY gained 0.4%. All right, and then finally we had the FOMC meeting minutes. So what happened there? This was from September 16 and 17 meeting, okay? So these are the meeting minutes from last month's meeting. So what happened here? They released the minutes, and the minutes showed a divided Fed. Most backed the 25 basis point cut to the range of 4% to 4.25%, citing downside job risks and balanced inflation outlook. Because last month, if you remember, we had weak jobs data. So most of them backed the 25 basis point cut to like boost the labor market, sorry. And what else? What else happened there? Um, uh, all right. Dot plot, yeah. So the dot plot, I explained it in a previous episode. Dot plot eyed two more 25 basis point cuts by year end 2025, but me personally, I doubt that we will see any more cuts. But historically, like after a shutdown, it might, like the Fed might go dovish, just in case. Okay, because that's better for the economy growth. So it was aiming, like the dot plot was aiming for the range of 3.5% to 3.75%, which means like two more cuts this year. Um, Inflation is seen elevated short term, like the core PCE was 2.9% due to tariffs, but returning to 2% by 2027. That's what they see. They see that PCE is going to return to 2% by 2027. One guy, which was a new hire, and he was hired by Trump, which Governor Miran wanted a 50 basis point cut for faster easing. A few preferred no cut at all, fearing stalled inflation progress. So they they have good progress in inflation. They don't want it, like some of them didn't want to uh, to stall that progress or like reverse it. Um, all right, so what does that all mean? It reinforces gradual easing path. The Fed is shifting focus to jobs while watching tariff-driven inflation. No rush. They're data dependent, as we saw, with high uncertainty from policy changes. And now we have the government shutdown, which is like a nightmare. But they didn't know back then. As I told you, these minutes come from last month's meeting. Amid shutdown, this provided some clarity on Fed thinking. Okay, So what happened to the markets? Initial chop in NDCs. Then they rallied 0.6%. S&P went to new highs on dovish cut signals, cushioning shutdown fears. Okay, gold surged 0.7% to 3,750 last week. Not last week, sorry, last month. But as you know, we saw a fresher all-time high at 4,060 like 2 days ago. But after that release last month, uh, that's what happened, and the USD weakened after the rate cut last month. So that's pretty much it. Let's move now to Thursday. Yes, we had Thursday. Fed Chair Powell spoke yesterday, which was Thursday. Okay. It was like the welcoming remarks at Community Bank Conference. So what happened there? Powell's pre-recorded video praised community banks' role in local economies, highlighting their customer ties and Fed's tailored supervision. Apologized for not attending in person due to travel. No mention of broader economy, policy, inflation, or markets. Just a non-event welcome. So what does that mean? It was like purely ceremonial. It wasn't about markets, but markets watched it anyway. No new insights on rates or outlook. In shutdown context, markets hoped for hints but got nothing, keeping focus on minutes. So, how did that impact the market? As I told you, it wasn't like really market talk, so it did not move that much. They stay like the markets held steady. But we started to see gold dropping like sharply yesterday. And then we had the 30-year bond auction. Okay. The previous was at 4.651%, and the actual came in higher. So what it means? It means that yield climbed from last reading. It means softer demand amid shutdown jitters and higher inflation risks. Okay, but auction still went smoothly. Reflects market is pricing in uncertainty. How did it impact the market? Nasdaq like lost 0.3% as long yields rose, hurting tech. The gold went down 0.4% on yield competition, and we saw it dropping bad yesterday. FX majors like Euro USD lost 0.2%, the USD gained 0.2%, the GBP USD lost 0.1%, and the USD JPY gained 0.3%. So the overall takeaways for traders, especially funding pips traders, light data week dominated by shutdown delays. That's for sure. Missing the reports and the jobs reports left gaps, fueling speculation and volume. Reserve Bank of New Zealand's big cut added global dovish flavor, while FOMC minutes confirmed easing ahead, which is like two more cuts eyed, but this can change in a week. So let's see. Oil build and auctions showed mixed demand amid uncertainty. Now, stocks were choppy, but like they were like net 0.2% for the week. And as I told you, we saw the gold dropping. Um, we need to keep an eye on any talks happening this weekend. Uh, that might change everything, and we'll see if they reopen. Today, we were hoping that they'll release the NFP and the unemployment rates, but the events were pulled away from the calendars, the economic calendars, because the shutdown still persists. So that's it for this week. I hope this was helpful. If you have any questions, please feel free to reach out or just drop your question in the comment section below. Thank you very much for listening, and I'll see you in the next one. Take care.